Holy cow, what an absolutely wild day in the markets today. We need to talk about what could be coming for us from here. I am Dr. Stock, Doctor of Education, and do you know what arcade character can help you get ready for vacation? It's Pac-Man. All right, I'm going to focus on just ETFs that track indices in this video. So SPY, IWM, then QQQ. In that order, each one of them I think is highly interesting. So let me waka on over to the charts for you for this one. We'll start off on the daily charts. We'll take a look at the weekly charts. I think those two time periods are absolutely incredible to look at for what happened today and what could happen from here going forward, especially because, man, we had a sell-off just the last 18 minutes, maybe half hour of the close, just a complete dump in the markets from where it was at before. It was such a nice day too. So let me put this up here for you. So price targets, SPY, how'd we do? We blasted right through the price target of 523, and we almost took on the second price target of 531. We actually peaked out on this thing at, let me see, what is it, 529.75. So we were like $1.25 short of hitting that price target, which is a little bit of rounding up, but that's okay. And I'll tell you why when we look at the weekly chart, why we didn't quite get there. You'll see it plain as day why that rejection happened shy of that Fibonacci retracement level. We have a high top wick from the day today as we sort of sold off at that level, but I think that it's understandable from where we're at. I don't think that it means that the bounce is over yet. The RSI on a daily basis is below 50. We need to keep an eye on that. Volume confirmation today was actually a pretty decent day, slightly above the last 20 days worth of average for trading volumes. Let's go out to the weekly chart, see what that looks like. So popping out the week, there we go. A little bit cleaner this time, less on here for you to get distracted by. Well, look, here's why we got stopped short of that 531. This beige line that you see coming up here. As a matter of fact, let me take off the EMAs. You'll see it even more plainly. This line coming right up through here, that's the 20-week resistance level that you have. This goes along with the Bollinger Bands here. That's a 20-period moving average. So when we say 20-week, that's the 20-period simple moving average that we're looking at right there. These Bollinger Bands are 3 standard deviations, so even bigger than the typical 2 standard deviations when we look at it. We're up above the 50-week and the 200-week, which is a bullish thing. So look at where we peaked out. You can see plain as day while we're there. The RSI near 50. As long as we bounce off 50 on a weekly basis, that's a very good thing, a very strong thing for a bounce to have happen. This is also a very good reason why we got rejected. Look at the support that we had before. Let me squish this up a little bit for you so you can see how important the 20-week was for us. We found significant support there, had quite the rally, and because of such significant support, then it becomes significant resistance. So as long as we can keep that momentum going on a weekly basis, I think that we're good, even if the near term we have that a little bit of volatility still mixing us up. If the weekly RSI dips down below 50, that dips down into bearish territory on longer time frames, that can set up a longer term trend of bearishness. So we need to be watchful for that because there's always the possibility that I'm wrong about the bounce. Look back here, by the way, when we touch the 50-week, which you'll notice, look what happens when we ripped off the 50-week. That's like twice the movement of what we got bouncing off the 20-week. Look what happened as soon as we got near that 20-week moving average that we have here. And look what happened after. So we closed above it, next day rip, and then it just kept on going from there. So this is significant resistance to pay attention to. Moving over to IWM. What happened? Well, actually, let's go down to the daily chart. Then we'll come back to this weekly one. We'll talk about that in a moment. You're welcome for the spoilers. So I said that we had a gap this morning when I was talking about it. If you haven't watched my morning video, you can go back and watch it. There's still some good stuff, especially updates for Bitcoin, Tesla, and NVIDIA, which don't fall into the scope of this video. Said there's a gap to fill from 205 to 207. We filled that gap. We actually went up to a high price today of 207.25. We almost made it to that price target at 208. Definitely didn't get to these other, I should say price target 3. I will fix that for you right now. There we go, because it is the third one, different than the second one that's up there. And now, mind you, this is the daily chart that we're looking at. The RSI is below 50. It did bounce back up, it ticked back up for us. So we bounced strongly off the 200-day support. That is an excellent area to find support. So if I was not out with the family yesterday, if instead I was trading and I saw IWM hit that price, man, oh man, I would have jumped on that trade in a heartbeat. Unfortunately, I missed like the biggest day of trading in the last 3 years. I didn't know it was going to happen. I guess maybe I shouldn't make plans on trading days, but I'm not sorry that I went with my family. That was great. So we filled that gap. Then we sold back off. Well, why did we sell back off there? Well, we had the 50-day resistance just up above that. So if I actually hide all this, you can see there's the 50-day. Look at the top wick that we have. Those things are darn close to each other. That 50-day 207.91. We peaked out today at 207.25. So just shy of that. Let's go out to the weekly chart now, and you'll see better, again, why we got that rejection. And so up here, this candle actually exceeded the 20-week that we're looking at. Well, I said that there was a gap to fill. The gap filled, and as soon as it filled, it sold back down for the end of the market, and we closed down below that. 20-week, still significant for us. It hasn't been as great for us. We kind of dipped down below it, ripped, dipped down below it, then really ripped up above that. So we have been dancing around it for a while for IWM as well, for the Russell 2000 stocks. Closed down below that. We're up above the 200. We're up above the 50-week. That's a very bullish thing to see that happen. RSI, 50.63, so darn near 50. When we look at that RSI, that needs to stay above 50. We need that bounce to happen on a weekly basis to keep the bullish direction going in this. If we fall below it, that sets up that longer-term bearish trend. It's going to mitigate that bounce that we get. First price target hit. Second one still in the cards. We need to look for that. So you can see the support, which mind you, that should be in green, not red. I'll fix that for you too. Boom, there we go. And that close below the 20-week, we need to overtake that. We need to close up above that on a weekly basis. Now over to the Qs. Check this out. Now don't look at that. My goodness. Daily chart. There we go. We'll come back to the weekly in a moment. There's a reason why I arranged them this way. So here we go. Here's what happened today. So today, we want to be looking right here at this one. I'll move it around for you. It says high top wick. And each one of them, by the way, today, IWM, SPY, QQQ, all three ETFs that track the major indices that are out there that I'm talking about. So S&P 500, NASDAQ 100, and Russell 2000 stocks. Every one of them had a high wick today as we sold off. That is selling pressure that we got. But I think that, again, there's reasons for each time that we get that sort of selling pressure happening for us. Once again, it doesn't 100% mitigate the bounce. It'd be nicer if it didn't happen, but it's never a straight up game. The market's never an easy game, and that's why I always come on here and talk to you and give you updates about it. And you can always come back and expect those updates to be ready for you. By the way, if you guys want to see my buys and sells, I'm getting my hedges readjusted out there for the short positions, and then I also established some long positions. You guys can see those in the Discord. You can also see how I learned to profit from this market using technical analysis trading. Patreon link down in the description, see my buys and sells. The link that you find down in the description for the technical analysis trading course, you want to use the code word doctor for that. That way you don't have to wait for my technicals. Although you can learn from them, you can also learn from that course, do your own technicals, and trade actively in the market there to learn how to really empower your portfolio through technical analysis trading. All right, so back to this. So check out that high top wick. That is bearish. We did close back down below the Fibonacci retracement level that we have on here. The 23.6, that's from that biggest peak that we have. Now, mind you, you can go to a more recent peak and you get a different retracement with different levels on it. And when we do that, we actually get closer to the 50, not quite there. But like I said, it can be really crowded on here sometimes when you look at that. Right there is the 50, which we didn't quite make it to. 61.8's all the way up there. Let me reset the Fibonacci's to where I had them, because honestly, I like that other drawing much better for them. So there we go. We'll put that back one more time. Now they're back to where I wanted them. I can redraw them at any time for you. So RSI below 50, but we did bounce today on the Qs as well as I figured that we would. It's not often that we get down there during a bull trend, and we are up above the 200-day. That's still a very bullish thing. That means the bull trend is still on for now, despite the sell-off that we have happening. Now, if we go out to the weekly chart on this, there we go. The RSI has crossed down below 50. So we got that cross below 50. That's a bearish thing. Look at the touch that we got right between the 50 EMA and SMA on here for support. That is significant support, 50-week support. The last time that we touched that was going all the way back to October of 2023. Look at that sell that we have over the past few weeks. So this is another case, I think, for that bounce. Well, look where we peaked out. This is why we didn't make it to that Fibonacci level that I had on there, that 50% Fibonacci on the more recent retracement that you have, is that we have historic resistance. Look at that shelf that we made back in March and April. That is what mitigated our upside today and caused us to sell back down. That is the line that we need to break. We also need to watch this trend line resistance that we have right here that has been established for the past several months. Again, this is the weekly chart that we're looking at, and you can honestly draw on here a few different ones. You can also have this one, which is right here that you can see we broke down through before. Matter of fact, that I like even better. So this could even be a further reason why you would have that, because you have what's called confluence between the historic resistance and this trend line resistance right here. That rejection, very strong rejection for us. Each time we have a reason why we got that sort of sell down. So wrapping up how we proceed from here, what we're looking for, IWM, SPY, we're looking for a break above the 20-week. That is the line in the sand. That is the thing that we got rejected off of for those two ETFs that track the Russell 2000 and the S&P 500 respectively. For QQQ, which tracks the NASDAQ 100, we need to see that break up above the historic resistance that we have, which is right around 447 to 448. We need to break up above that solidly. We need a full candle close above it. Volume confirmation would be great. Let me show you something that you should be just aware of, something to watch out for, because this can really flip things around on us. So this is just the weekly chart, just to bring this in real fast. If we come up here and we get rejected off that yellow line, getting rejected there, along with what we had happening previously. So if we come back up here, we get rejected, come back down to this diagonal line, that would set up a head and shoulders pattern, which about 60-ish% of the time plays out to be a bearish reversal pattern. That would be something to watch out for. Certainly a breakdown below the 50-week support would also be in the cards for something like that. Now, mind you, that doesn't mean I don't think we're getting the bounce. I still think we have a lot of confirmation right now that says that we could still have the bounce. We could still have it play out. That's still what I'm going with moving forward from here until I have further evidence otherwise that tells me that I should change course on that one. So I still think we have the bounce alive. I think it could last for a couple days, couple weeks. We're going to have to see. But if we get rejected at those resistance levels, so we retest, get rejected once again at resistance, that's something that could cause further downward pressure. That's something that could lead to a further sell. If we retest resistance and break it, that can lead to that massive rally. That could lead to that nice big old bull bounce that we're all looking for. And then we can sort of replan. We can come back and kind of pick through what all is going on. If you guys want to talk with me and my community members, then there's that link for that Patreon down in the description. See my buys and sells, see how I learned to build my cash pile here so that I can continue to invest in my long-term positions. I usually do that through options, just so that you know that. You can see the buys and sells, links in the description. And if you want to learn to do technical analysis trading for yourself, there's also a link for that down in the description. It includes the stock mode bread recipe, by the way, which is an absolutely clean, easy, and wonderful way to approach trading in ways that can allow you to time your entries and exits and everything. And people are experiencing wild success with that one. And it's one that I personally use myself, and I 100% stand by the bread recipe, and it's totally worth checking out. That link is down in the description as well. Use the code word doctor. Make sure that you take advantage of the discount that's out there for you right now. Doctors, DOCTOR. Thank you guys very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.